Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It's Monday, September 25th, 2006. And I've got the mid caps on the screen here right now only because I had posted earlier during the day that I thought the market was in danger of breaking down, and the mid cap 400 rather, staged a very nice turnaround along with the rest of the market. Now, what I was looking at was the fact that the market last week closed at a lower low, and I was saying that I really wasn't convinced yet that they were due for a severe sell-off, that I thought we really needed to get below these levels. And that's going to be the important level going forward, which is about 133.60, just a little bit above that. And now it's just looking like a range-bound market, really more than anything, up to about 138.50. I did say that intermediate term or short term, I think I said that I thought the market needed to get back above 136.50 to have a little bit more confidence in the upside, and it was able to do that. So that was a definite positive for today. And I think that if this market's breaking down, it's probably not going to happen for a little bit. I think we got a little bit of reprieve there in the mid caps. So my if I seemed alarmed earlier, I was just concerned and looking for the potential. While I was looking at that, though, the S&P 500 did break out to a new high, and I don't know why my chart isn't pulling up. So let's take a look at the Nasdaq 100 instead. Yesterday, I said that we were in a tricky market environment, and that's why we were going to continue to focus on the individual stock ideas. And I still believe that's the prudent course of action here, even while the market does make a new high. And the Nasdaq 100 got back up above that 200-day moving average, so it's just back and forth consolidation above that level. But the fact is, looking purely objectively, the 50-day moving average continues to advance, and that tells me innocent until proven guilty. The S&P 500, the spiders. Let's go ahead and change the scaling here so that we can see a little bit further back where we've come from, and you can see that the closing high today, we closed at 32.49. Prior closing highs were 32.51 right here a couple last week. So we did have a higher close last week before that sell-off developed. And then today we did print an intraday high, though, by printing at 132.85. And you can see 132.80 was the prior high. So the S&P 500 made a higher high, and that's what's going to get the headlines. I didn't have my television on today. I'm sure they had to have been talking about that. But again, the market's still extended here, but in an uptrend. So we have to respect the trend and be aware of when there are potentials for the market to break down. The SMH, the semiconductor holders, still is below its declining 200-day moving average, but showing this pattern of higher highs and higher lows, so that's a positive. And had a nice day today, got back above that 10 and 20-day moving average, so that's always nice to see from a bullish standpoint that it's back up above that level. And for some reason, my intraday charts aren't updating there on the semiconductors, so maybe we'll have to take a look at those again later. Let's go ahead and take a look at the stocks that I've been mentioning. First of all, let's start up with Comico. I suggested Friday that, had you still been in this one, and officially we got stopped out of it, but I just wanted to revisit it because I said, you're probably better off taking your profits if you're still involved in the short and buying puts, because I thought it was set for a bigger decline. And it had a very nice decline intraday today. Kind of was kicking myself for covering what I thought was a good area, over in this level near the 37.65 on Friday, because obviously it got a lot lower than that and came down very nicely. This stock still looks like it's in trouble for the longer term, but right now I think that short term it's pretty much met its objectives. So if you are still in that, I think you're probably over welcoming your stay on the short side for the near term at least. Monster, I was also suggested Friday as a new short idea at $36 and I'm sorry, where am I? $37.20, and I suggested putting the stop at 36.85. So you get stopped out of that one today with a gain of about 35 cents. For Monster. NDAQ, this stock, I thought it was looking good on a daily time frame. Still do think that, by the way. This daily time frame still, nice consolidation above the rising 10-day moving average. But what we were looking for in order to purchase this stock was for the stock to drop below $31.10, which it did do. I'm sorry, drop below $31 a share, which it did do, obviously, and spent most of the day below there. We were only going to buy it as it regained upward momentum and got back above $31.10. So there was no reason to get involved in NDAQ. Even though the market did well, NDAQ didn't, so there was no reason to get involved there because it didn't ever develop that momentum that we were looking for on the upside. Silicon Motion Technology, symbol SIMO. We looked at this one last week and then again over the weekend as a purchase today. The play there was to buy it above that 5-day moving average, 1645, and she should have gotten in there. And I think that the target still remains up towards $17.50. And I think that you ought to be raising your stop at this point, at least up to about this level, maybe $16.58 or so. So right now, there's no reason to be putting your stop at a position where you would be losing money if you were to get stopped out. So you want to start thinking about protecting profits in SIMO because the stock has started to experience a nice little move in here. BRLC, I'd suggested buying this stock above $4.40. It got above there, stop at $4.26, and it traded down to $4.26. So should have been stopped out of there with about a 14-cent loss in BRLC. Aspen Technology, symbol AZPN, what we were looking for here was an initial rally up to $11.35. We got that. And then to sell the stock short below $11.25. We got that too. Unfortunately, we also got our stop. Our stop was at $11.52, so right up in here. So about a 27-cent loss in AZPN. And this stock just doesn't want to break down for whatever reason, so maybe we're just best off leaving that one alone. There was a nice winner in Century Aluminum today, symbol CENX. On yesterday's video, I had said that, it experienced that short-term rally, so we didn't really need to see strength on this. Instead, what we wanted to do was short the stock below $32.27. That occurred right in here early on. And then our target was going to be $30 to $31. I said, basically 30 to 31, and officially the target I said was 31 bucks a share. I think that once you started seeing the market reversing and the fact that it got back above the VWAP, you probably should have been out. Worst case scenario, right around the 31.25. So should have made at least $1 in CENX if you did choose to participate in that. And let me see if I can get those intraday charts to work for the SPY, so we can see if we can take a look there. No, I guess they don't want to. Whatever the reason that is, I have no clue. NASDAQ 100 on a 1-minute time frame today did set up this little shoulder, head, and then shoulder as it found support above that daily VWAP. And I think that it was probably at about this time that I was thinking, well, if it fails here, because the S&P was, that the mid caps might go down with it. So I just wanted to put out a kind of a little bit of a warning there. And I had actually bought puts in the mid cap 400. But as the market started rallying over here, fortunately I sold my puts. Didn't get long, but at least I sold the puts and minimized the losses in those puts to a very small amount. Now it looks like the buyers are trying to regain control, but on this 10-minute time frame you see here, it's just basically a bunch of back and forth action, which is why with stocks like SIMO working nicely on the upside and CENX working nicely on the downside, that's why we're going to just continue to focus on the stocks. We remain in a critical overall area. I'm not going to repeat all the reasons up here. I'll just draw these lines in, though, to give you some reference. But we made it in a critical area for the market. So it's best to trade smaller. Make sure you're honoring your stops. Be aware that other opportunities may exist on the long or short side, and look for areas that where that weakness and strength is. My name again is Brian Shannon. If you're seeing this video anywhere else on the web, then my website, my blog, alphatrendsblogspot.com, you're typically seeing it a couple hours later, and I haven't always given authorization to all the people that do show this video. So go ahead and take a look at my blog, and don't give those vultures any more hits that they don't deserve. Thanks for your time, and I'll be back this evening with another video with ideas for Tuesday.